Hello, everyone. Welcome back to the MHP Show Podcast. I'm your host, Derek Vickers. And on the MHP Show, we're talking mobile home parks, operations, due diligence, crazy stories. And by the way, if you haven't checked out our show we did last week with Jimmy Johnson, the Sand Dollar Communities, it's funny, man. I mean, I got some crazy stories, but Jimmy has some freaking crazy stories, right? So check that episode out. Also, if you are a potential investor and you are looking to get into the real estate game, to get into the mobile home park game, and you love the asset class, but you don't necessarily want to go and do it with yourself and deal with some of the stuff that me and Jimmy were talking about last week, good. Go to victorycapital.com. We'd love to help you. We'd love to get you invested because your money's going dead, sitting on the sidelines, as I talk about every week. And just look at the data. Look at the data. All the doom and gloom shit that I see on TV, all the doom and gloom stuff that you see on YouTube, it all points to one thing, is to owning assets. And the people who get crushed in downturns and weird economies are the people that don't own assets. Right? So get it together. If you have cash sitting in the bank and on the sidelines, like, look, let's go invest in some deals. We know what we're doing. And you can come in. Our fund is already operating. We have 7 deals into the fund. So reach out to me at Derek@victorycapital.com. You can reach out to Milton at victorycapital.com. We'd love to have a conversation with you and give you the deets, the details on the fund. Okay. So, this morning I woke up and I basically was like, okay, yeah, I'm going to put my gym clothes on. I'm still in my gym clothes. I'm like, okay, hey, I'm going to go to this local little coffee shop and bang out some work. And then I'm going to go to the gym because I did that yesterday and the schedule worked out. Like, I don't know if anybody else does this, but my schedule, it's just, some days I like one schedule and some days I like the other schedule as far as going to the gym goes. But anyways, I was like, I'm going to go do some work for about an hour, hour and a half. And, here we are 5 hours later, and I still haven't been to the gym yet because it just got locked in and I needed to handle some things. And so we got it handled, and which prompted some of this show and what I wanted to talk about today, because, we've bought quite a few deals in the last 6 months. And, I get questions from investors that are like, hey, are you guys just buying everything? And I'm like, God, no. Like, because no one sees the amount of deals that we go through to actually get to one deal. And I think the number that we've had is we've passed on 50% of the deals that we've had under contract in the last 6 months. One of those being a portfolio of multiple deals, just for various reasons because of infrastructure, which leads me to the real topic that I wanted to get to today was DD infrastructure and retrading. What is retrading? No one likes it. Like, I don't like it. Brokers don't like it. But look, it is inevitable in the mobile home park business, right? It is inevitable when you're protecting investor capital, that if you come up with a septic issue that's 10 or 15% of the purchase price, we have a problem. We have a problem. And because of that, we cannot pay the price that you were paying before. This is what a prudent operator would do. I'm taking investor capital. I'm treating it like my own. And I'm not just going to say, hey, yeah, it's fine, just because, somebody wants to get paid, right? That's not my game, because I have investors and I treat their money like mine. And if there's a $500,000 issue, that's an issue. So, how do you do this? How do you do this effectively? Now, there's a way to do this and a way to not to do it. The way not to do it is that, you put a deal under contract with plans to retrade with no data at all. Like, you go through due diligence, everything's fine. You don't find anything that's material. And then you go back to the seller and say, hey, I need $500,000 off, because your plan from the beginning was like, yeah, I'm going to get it under contract and try to retrade them. Right? People do that. And that's just not my game. Like, if I put it under contract, I'm fully committed to buying it at that price. unless I find other data that actually puts me and my investors at risk, right? And then I'm going to have to renegotiate. But out of the deals that we've closed in the last 6 months, it's about 50%. 50% we've had small retrades on, and the other 50% we didn't. I mean, we bought a deal in Lakeland, it's about a $4 million deal that had private utilities. We checked the wastewater treatment plant. We checked the well system, and there was nothing there. There was nothing there. So I couldn't go back to the seller and say, like, hey, we need a discount because of X, Y, and Z. Right. So look, I think if you're a prudent operator and you want to keep, look, again, I think it's there's a time to do it and there's a time to not do it. So that would be an example of not having to retrade. Now I'll give you another example that we had a deal under contract that was at a great basis. It was in a great market. This is in a hot, 8 million people in the MSA market. And it was, I think we were like 60 something a pad in probably a $900 lot rent market. So it was a great deal at a great basis. We go in, we're doing our inspections. It's important to do your inspections. You're going through your due diligence list. You can probably pick what the problem could potentially be when you're going in. If you watch my show like 5 shows ago, right? I think it's important to identify this. If you know the electric is going to be bad, check the electric first, right? Because you don't want to waste a bunch of time and money. Like, why would you check the other stuff if the electric is bad? So we go into this deal, we do our inspection, we get a quote back they give us a range, 600 grand to $1 million. And I'm like, okay, like that's kind of a big range. 600 hard for me to think with on a $4 million deal. $1 million extremely hard for me to think with on a $4 million deal. Not a 4 million. This was a what was this deal? The other Lakeland deal was 4 million. This one was maybe around 3. This is maybe around 3. But yeah, $1 million is hard for me to think with. That's 33% of the purchase price, right? So when this happens, and this will happen to you once you find these things, right? You're going to go to a contractor. They're going to give you some big number, and you're going to be like, well, I want a second opinion. So now you're going to have to go find another contractor and get another opinion, and another opinion, and another opinion, and another opinion. And you're going to get stuff all over the spectrum, right? So you're going to have to actually look at it and analyze the data. You got to analyze it. You got to talk to the contractors. You got to talk to AI. AI can help some, right? You can ask them some of these questions on things, but then you're going to, eventually have to make a decision like what you're going to do, right? And look, so in this case, the retrade, like also the middle sewer line in this park needed to be replaced, probably another 40 or 50 grand. So the retrade necessary on this park was way too high. So I didn't even go back to the seller and say, hey, we need a discount on this. I said, hey, we're just going to back out because I know we're talking to the broker. I'm like, I know that the seller's not going to take what I need. It's $1 million. He's not going to take $1 million off because it's almost, half of the purchase price. It's just not going to do it. And I got that. The broker got that. So we canceled the deal and it was fine. Now, another example of doing this is we have a deal. We have a deal under contract, and we're going to be closing this deal finally after like 7 months of being under contract, because when we went under contract, we started the due diligence process, and I knew it going in. I said the septic system is going to be it's going to be the variable here. So we go in, we check the septic system, and lo and behold, it's a mess. And so we get a quote. We get quotes that are all over the board here, anywhere from 100,000 to 750,000 to $1 million. I'm not kidding, right? So we found out after going through multiple quotes and getting multiple contractors. I think we had 4 or 5 companies come and look at this thing, and we were able to say, okay, we think that we can get it done for this. We feel comfortable with it. We've done enough research with the county, with permitting and whatnot, that we feel comfortable to say it's 600 grand, right? Would that call it what it was? And So we went back to the seller and said, hey, we need this deal. This was a big ask, right? This was a big ask. But in this case, I figured, I was like, okay, I think we can ask this guy because he has some issues with the deal and whatnot. And I was like, hey, man, we need a retrade, which was probably, I don't know, maybe 35% of the purchase price. So it's a big number. It's a big number. And he's like, no, I've got a septic guy, right, that can go look at it, right? So we extended the due diligence period because I was fine. I was fine with getting another opinion if it's somebody that can come in and fix it. So he went in and got another opinion. And the guy comes back and it's substantially less. I'm like, okay, what's this? So now, like, this is like, I got to tell you a story about another deal, but just because some guy comes in less and the other guy's coming high, you can't just say, oh, I like the quote because it's low, right? And say, yeah, boom, we're moving forward. It's only 50 grand instead of $1 million, right? Where's that gap and why is that gap? And how do you go in and look at that? And the reason why I'm going in deep on these infrastructure problems, because you're going to have these come up. If you're buying deals regularly, you're going to have these come up. So basically, I ended up talking to the septic company. I got to get involved. My team can't do this now. You got to get involved. And come to find out, he was only quoting on the front half of the park. So he went back and recalibrated the quote, and he's about 350. We trust this guy because he's familiar with the mobile home park business. He's a good old boy that's been in this area. He's done plenty of these for mobile home parks. In fact, he owns a mobile home park himself. So we like this guy. We feel comfortable about the quote. He's not just a company that's coming in and says, yeah, it's old, rip everything out and replace everything, right? So we felt comfortable with that. And then so we're like, okay, right? So we got those quotes back, right? Because the seller, remember, gave us a $50,000 quote, and we went back and asked his particular septic guy. We're like, hey, it's actually going to be $350,000. So we came back instead of at 1.4. I was like, hey, we will do, I think 1.65 or 1.17 or something like that. And he was like, no, but I'll do 1.8. Okay. Now look, if I was in these negotiations, right, you could be in these negotiations and be like, okay, he came down 200 grand off the purchase price, right? He came down 200 grand. But I was like, no, we need to be at this number because I ran the numbers and was like, hey, even if we have to spend $500,000 on the septic, I think we could actually pay 1.8 because really our basis was only, and this is a small park, by the way. So 175, if we had to spend 500 grand, I'm at 2.25 divided by, that's 64 a pad. In this area where the lot rent should be $900, I'll buy that all day long. So I was like, man, I feel good about that at 175 because even if we have to spend 500 grand, we're going to love where we're at on this deal. So anyways, he came back at 1.8. I came back at 1.5 because there were still some other CapEx things that we needed to spend money on. Right. But if I wouldn't have made that last ask, maybe he wouldn't have done it. But the point is that I like in that deal, I'm not trying to dick around with this seller. I'm not trying to screw him over or play with him. Like I'm actually trying to take my investors, take risk off the table for my investors, take risk off the table for myself because I'm guaranteeing the loans. And I want to put us in a position where I can deliver on the back end because it's going to be a lot of work and it's going to be a pain to deal with. And we have to be like, I need to get paid for that. It's got to be worth it to do that. Right. And I don't know if you ever listened to the Be Obsessed or Be Average by Grant Cardone, but he talks about actually being more dangerous and being more uncomfortable actually takes you out of danger. Because if I was just been like, yeah, we're buying this cheaply in the first place, we'll just buy it and move on. Well, our basis would have been higher, right? And there would have been less room for operational things to happen, right? But now, since, we were in there and willing to go in and say, hey, this is what's wrong. We gave the data, we gave the information as to why, we were able to go back and get the price that we felt really comfortable with. So look, and I think that's the right way to do this. Like you go in, you do your due diligence as a prudent operator would do. A prudent operator. And sometimes when you're dealing with these neophyte and dilettante, I'm going to use some scholarly words right now, brokers, it's like this is what a prudent operator would do, right? And there are great brokers out there. Shout out to Ben at Sunstone. He's a freaking beast. Dude is awesome. A freaking great broker, right? So, and when you're doing this, you have to have, if the broker's representing you, you got to make sure that they're sort of on your side, right? To a degree, right? Because I've had situations where it can get mixed up and you feel like the broker's not working for you. So, look, I think that's the right way to do it, in my opinion. Now, we have had, I will say this too. Just expect this to happen in your deals moving forward. Clean deal and mobile home parks these days just does not go together because this isn't 2020 anymore. Like there were some deals in 2020 and 2021 that was just like, yeah, we'll just buy it. It's cheap enough, like it doesn't matter. And we had some infrastructure issues, but luckily, I mean, the returns were still killer on these deals because we bought them so cheap. These days, that's not necessarily the case, right? You're paying more. There's 5 more years on the infrastructure. The seller's been band-aiding stuff. Yeah, and so look, you're going to deal with these problems, and the biggest question is always who's going to pay for it. In my opinion, it should either be a shared cost or it should be the seller's cost because if they bought this park, they've owned this park for 20, 30, 40 years, and they've been, putting duct tape around the sewer lines. I mean, maybe somebody's done that, but they're band-aiding stuff, and they want a premium number for the property. But when you're paying a premium number, you're expecting to get premium product. And when you're not, I think that's on them to fix that. Somebody may disagree with me. I know the sellers would disagree with me. I know when I go and sell something here soon, I'm probably going to disagree and be like, you pay for that. So I get it. I guess it's just whose perspective that you're looking from. But right now, as a buyer, I think it's the seller's cost. I'd love to know what you think in the comments. Who's responsible for the deferred maintenance? Is it you coming in? And look, we're always responsible for it to a degree. Even in this one deal, the deal where we got the deal accepted at 1.75, there's still other stuff other than the sewer that I think I mentioned before that we're going to have to go in and handle. So we're still handling some of the deferred maintenance. We didn't talk about the $25,000 or $50,000 in tree work that we have to do with this property. So I'm not always saying, look, I'd love to say all the deferred maintenance is their deal, but it's not. We had another deal that we bought. It was about a $3 million deal, 50 some units. Really great deal. Out on the Space Coast in Florida. It was a couple years ago. No, it was last year. I don't think we retraded at all in this deal. No, we didn't. There's a couple, like one of the septic. This was like a 2-to-1 setup. So 2 homes to 1 tank. So if you have to replace 1 tank, it's 10 grand. You move on. So maybe there was a tank that was out. Nothing huge, right? Or 2. Maybe there was 2. Yeah. So the seller actually came back to me at the end and tried to retrade me. He's like, hey, we have to pay for this title work. And, I replaced this electric panel and this septic. So I need to get another 100 grand. I'm like, no, dude, because of this, and this, we found these 2 septics. There was a couple other issues. There was a couple of electric issues. I was like, no, I didn't ask you for a retrade. So now you're not going to ask me for a retrade. And he was cool with that. Right? So it can also work in reverse, and the seller will try to retrade you. They can. But in that instance, it was good because we were both conceding a little bit. And I think both parties do need to give in some cases, but it's all situational and how bad the deal is. There's other things you can do instead of a retrade, right? You can tell the seller to freaking fix it, but he's got to do it. Like, he can't have the Saturday Septic guy come and patch it up like he's been doing. He's got to do it to code. Like, you can have him fix it, and then you come in and buy the park at the price. That would actually be optimal level if you can somehow monitor if he's doing the right thing. You could totally do that. So look, we've got tons of war stories in doing this, and I think the moral of it is that, hey, you're going to go in, you're going to be a prudent operator, you're going to do your due diligence, you're going to check the utilities, you're going to get up, you're going to gather all your costs and say, hey, these are costs that I should not bear. Right? How do you determine which costs you bear and whatnot? Well, like tree work, if it's a lot, maybe you can ask for some of that. But I think infrastructure and really deferred maintenance stuff is retradable, especially infrastructure in this stuff. And you know what I found? That everything that you find in due diligence, of course, the seller doesn't tell you up front, but they know about it. I don't think there's been one time where the seller was surprised on what we found. I just don't think there has been. I don't think there has been because they know. They know. We had a seller when we were doing the walkthrough. It's a deal we have under contract. And the seller's like, "Oh man, you don't need to. You're good. You don't need to check the septic. The health department already inspected it." And my antennas go up there. I'm like, "Okay, I hear you, but I'm going to check the septic." And of course, we check the septic. The tank failed, and it needs a big replacement, right? So, take it with a grain of salt, but you got to do your due diligence, get your costs together, and what stuff is going to cost. You need to get quotes. You might have to get multiple quotes. And then you're going to have to decide what's retradable and what's not, which I don't think tree work's that retradable unless it's just completely astronomical. Asphalt, I usually don't retrade for asphalt because we're going to do the asphalt. Fencing, like, we're going to do that. Like, we budget to do the asphalt. So if the pavement's terrible, I'm not going to retrade for that. But the infrastructure, yes. I will do that because I think it's 100% necessary for the deal to work out, because this infrastructure stuff can just kill you in these deals. I mean, I don't know how else to put it. Not only can it kill you, I mean, look, everything's fixable. It's just time consuming for your team. And then you'll probably end up having to get involved in some of this stuff too. So the other thing that's been interesting that I've been observing lately is that we usually go and get 45 days due diligence. I don't think it's enough time anymore. Mm-mm. I used to be scared to go in and ask for 45 days because I'm like, oh my God, they're going to think I'm wholesaling the deal. They're going to think I'm doing this. It's typically 30 days, but now you can't get shit back in 30 days. If I had a surveyor go out, like if I get a deal under contract today, I mean, I guess you can have stuff lined up before. You can already have things lined up. You kind of teed up. And they could go out the next day. Maybe you could get it done in 30 days, but it's going to be hard because by the time you get the septic company to go out there, or the electrical company, or whoever's inspecting the infrastructure, they're going to have to go out. They're going to have to come back. They're going to have to look at the report. They're going to have to make the report. They're going to have to give you a quote. And if the quote's crazy, you're going to want to go get another quote because the infrastructure is the thing that you're going to retrade or not on. Right? So you want to make sure that it's the correct number. Why do you want to make sure it's the correct number? Because it may just be so much that you're like, I'm done. I don't need to look at anything else. Right? And it has been hard for us to even get all this stuff done and all the reports and quotes back that we need in 45 days. I mean, believe it or not, Believe it or not, I used to think, oh, 45 days is plenty. You know, I don't know. I don't know what it is. I don't know what it is, but it hasn't been, and we've needed to extend on quite a few deals here recently. Just extend the DD period for that. So I think we're going to end up working something in our contract that says, something about if we don't have these, things back, then, due diligence is extended until we do. So now when I talk to sellers, I might try 60 days because I think that's what you need. I think you need 60 days because it's just annoying having to go back and like, hey, we need another 15 days due diligence because you got to do that. You got to draft up the agreement. You got to send it to their attorney, send it to yours. It might take a day or two to go through. It just takes more time. Right. So look, you got to be more prudent in buying these deals today. Like there's no question about it. Like your due diligence has to be better and on point because there's just more hair on these deals. Well, maybe I'm jaded because the 5 deals that I've got under contract right now are just, I mean, they're harried. Like, I mean, you name it, we're dealing with it. I mean, you name it. We had our first phase 1 come back dirty on a deal. I've never had to do a phase 2 before, and 50 deals. So we're going to go through that process and see how that goes. And I've never had to do that before. I don't know that much about a phase 2, but I've kind of gathered some data on it. And even look, as many parks as you're going to do, you're going to stumble upon things that you may or may not have done before. Like this is a new experience for me in getting the phase 2. Right. And here's another example. We had to extend the due diligence because the phase 1 came back dirty. We had to go get a phase 2. And we haven't gotten that yet, so stay tuned. It seems like there was a gas station or something like 50 or 60 years ago on the property. So we'll see what comes back. But like that came back yesterday. I'm like, God, how much hairier can these deals get? Like it's crazy, man. Crazy. But that's what you're going to deal with. And as I said before, just etch this into your brain that mobile home parks and clean deals, maybe there were some before, or maybe you just didn't care because you were buying them at a low basis. But I just don't think that's going to exist anymore because you're going to go in and find something. And this isn't, I'm not the only one that's having an issue with this. There's other people around the industry that are having infrastructure issues, and whoever you're dealing with, they know that going in. If they're an experienced broker, they understand that. If they're an inexperienced broker, well, they're not. So, just don't make don't make those mistakes, and you have to be willing. You have to be willing, if it is necessary, to go in and ask for the discount if it's necessary. Don't be an a-hole about it. Don't do it indiscriminately and just do it to do it without any data to back it up. And when I do it, I prefer to do it via email because I can get super detailed on an email about what we found. Here are the quotes. Here's what the septic company said. Here's the septic report. Here's our DD report. Here's what we found. This is why, right? I'm presenting data, like more is better, right? More is better. Hey, we got these people to go out, these people to go out. You can call them here. This is their license number. I'm talking like super detailed because it gives more credibility to what you're asking. Like I've had deals before. It was just like, hey, I need 50 grand off because of this. That's not as, I think it's people believe what they see, not what they hear. So yes, I like to negotiate on the phone, but I like to send the initial one and give a report of what we found. And they can either agree or disagree with it. And I welcome sellers to disagree. And it's like, hey, let's get more quotes. I like that. Like we're working with some sellers now. They're like, yeah, I just, that seems like a lot, Derek. Like I'd like to get my septic guy to come in and get a quote. Yeah. Hey, let's do it. And then their septic guy comes in and says nothing's wrong. And then we have to, fight through that. But, I think it's yeah, you just got to be a good operator because you are raising money from investors at this point, and your money's in there too, dude. Right? And your team, you don't want to kill your team. And if a deal's not doing well because you made a mistake, then you're going to be working for free if you close on the deal. All right, everyone. So thank you for tuning in to the MHP show as I share my own. I'd like to have longer podcasts, but I don't think anybody likes to hear me talk to myself for 30 minutes when I do these individual. But I just like to give data of what's going on and what I'm dealing with, because I'm sure if you're buying deals, you're dealing with them too. It's like we go to MHI, and I think I'm the only one dealing with things, and then everybody else is like, I'm dealing with that too. And I just feel so much love inside when I figure out that it's not just you know, VC dealing with that. So thank you guys for tuning in to the MHP show. If you're looking to invest, if you're an operator and want to be on the show, I know there's some of you guys I haven't had on. Love to have you on. Love to have you on. If you're affiliated with this business, in any way, I'd love to have you on to talk about what you do and the current state of the market. I don't know what's happening in this market, by the way, guys. The treasuries are going up. Let's see what the treasury is today. Let's see. Treasuries are going up, but I kind of like that for us, guys. I kind of like that, even though you have to obviously the numbers change in your underwriting a little bit. The 5 year, which most of our loans are based on, is 4.26. And then the 10 year is probably 4.6 or something. Let's see. I like this opportunity, guys, because we were talking to sellers months ago. Yeah, the 10 years about 4.56. But we were talking to sellers months ago, and they're like, "Hey, when Powell gets out, interest rates are going to go down." And I'm like, "Powell's out, bro, and they're going up." So it just goes to show you the Fed really doesn't have that much to do with Treasury yields. If anything, they really don't. So I think this bodes well for us. We're going to go back to these sellers and say, look, dude, the rates are going up. So the longer you wait, the more screwed you're going to get. And it's so crazy how people are still holding on to 2021. They're like, Powell's coming back. We're going back to zero interest rates. I can sell the 3 cap again. That's not going to happen, guys. It's not going to happen. I love this market for us. But anyways, check us out. You can check me out on LinkedIn, YouTube. You can check this out on iTunes or Spotify. Leave a comment if you like the show. That'd be great. If you don't like the show, that's cool too. Why are you listening to this point then? And then you can go to victorycapital.com. And we will catch you guys next week. Peace out. Thank you.